Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick with agmarket.net. And of course, post-report analysis. And as far as the grain trade, we are seeing some mixed action there. We're mixed over in the livestock complex as well. Soybeans to the plus side. And let's talk a little bit why, Jim. We did have U.S. ending stocks drop by 15 million bushels by USD. Argentina production cut by 8 million metric tons. So overall, it was a fairly bullish report here for the soybean complex, wasn't it?
No doubt about it, Michelle. I think you nailed it. I think, the big guess within trade was what were they going to do with Argentina crop? The average trade guess was around 36 million, but the rhetoric was this crop is going to get closer to 30. There's a few people out there now saying sub 30. In history, as a government just doesn't get as aggressive as they did, and they cut it by 7 million, put it below the average trade guess, and the market is responding accordingly, as it should, as the world's trying to kind of ration out demand a little bit.
That's right. So do you think that we are sub 30 million metric tons here on this Argentina crop? And if so, what does that mean for U.S. exports down the road here?
I don't know if we're down below 30, Michelle. I mean, the one thing that we've known over the years, when we start losing production, it is a little bit of a race to the bottom to see how low the crop's going to get as it, analysts try to kind of one up each other. But there's a lot of people out of Argentina saying this crop was, they've had 7-8 different heat spells. They had a frost on this crop and the damage is done there. And what's going to happen there is they can't get those beans produced. They can't turn it into meal. That should be supportive of our meal market as we go into the summertime, and that support of the meal will lend support to the beans.
And of course, the rally that we've had, and even this week scoring new contract highs in meal, has really been predicated on that lower Argentinian production number. Yet we have not been able to get older new crop soybeans back above resistance areas. Do you think we will at some point?
Well, it's going to be interesting to do that. You got to get the funds to come in here and start buying again, I believe, because there is a little bit of weird dynamic going on. You get the bulls, Michelle, to buy up on the idea that, excuse me, that the meal's driving it up. But on the other hand, when you look at the world pricing of beans, Brazil is selling beans a lot cheaper than us, over $1 cheaper than us. So we're not going to export the beans. So it seems like the bulls will buy it on the Argentina production problem. The bears step in and sell it whenever they get a rally on the idea we're just not competitively priced on the raw beans.
Yeah, and then you get up into the upper levels of the trading range and not only hit resistance, but isn't that where we start seeing a little Brazilian harvest pressure or farmers selling at those levels too?
Exactly, because right now Brazil does have a record crop. They left the Brazilian crop unchanged, and it is a monster crop. They're running out of storage very, very fast. So yeah, it's forcing beans to market, and that just caps it. So whenever they get a rally, the Brazilian producers are taking advantage of it. So what it probably means near-termers are just going to be more of a sideways range. Like I said, the buyers will buy on the small Argentina crop and the meal demand, and then the sellers will sell on the the fact that we're too expensive and can't compete with the Brazilians.
Let's talk about what we got out of the WASDE report for corn. Ending stocks, it was slightly bearish on a U.S. basis, with exports dropped by 75 million metric tons. So that went right to the balance sheet. At this point, let's talk about that first. Do you think that was too aggressive a number, especially when you know that the Argentinian crop is being cut?
Well, I think the government was kind of what they're looking at is the export pace. It's been horrible. There's no doubt about it. When you look at that pace, they're fully justified cutting that crop by 75 million. Might have been a little bit too aggressive, potentially so, because as this Argentina crop gets smaller, you're taking less and less grain, obviously, off the world market. And the other thing is they did leave the Brazilian corn crop unchanged. But the fact of the matter is that crop's just getting planted. If that crop, and it's getting planted later than normal. So if it runs out of water or we have an early frost, all of a sudden that world supply really gets tight. And that might drive demand right back to the United States. So we'll see. They may have to back that up down the line, depending on how everything plays out this summer.
So Argentinian corn production was lowered quite substantially as well. Were you surprised with how aggressive USDA was on that cut?
Well, no doubt about it. Just like the beans, they really took a butcher knife to it instead of a scalpel. That's dropped, I believe, the world production over 70 million metric tons year on year. So, the world is in a little bit of precarious position right now. Now, if Brazil has a big crop and we have a big crop, we are going to skate by fine. But if for some reason we end up having a problem or Brazil has a problem, with the world stocks use as tight as they are, this market could see a very sharp rally this summer. So what it tells me, and for the producers out there, prepare for more volatility as we get into the summer weather season.
All right. And the corn market right now trading just a little bit lower. And obviously the wheat market has been a big influence on what's been going on with the corn market and the drop that we have seen here out of that trading range here recently. Let's talk about the wheat market. Unchanged in terms of the ending stocks figure for wheat, but does the market care right now? Because really we're trading more so the headlines on this Black Sea Grain Initiative and the idea that this deal is going to get extended, right?
Exactly. The wheat number today had nothing to do with today's trade. It is the idea that we are going to get that that Black Sea Initiative extended here past March 18th. And then on top of it, the reality is Russia continues to sell wheat to the world cheaper than we are. So we're trying to get costs competitive. We're just not there. And that's what's allowing the market to break.
Yeah. So what about the outside markets? The macros, now that Fed Chairman Jerome Powell testified in front of Congress yesterday, we saw the big swing down in the Dow with ideas the interest rates are going to go up. The dollar index took a sharp rise. Do you see the macros that the grains are going to get caught up in that macro environment here going forward now?
They could. I mean, the reality is, I think the market was not listening to the Fed. The Fed all along has been telling us, hey, we're going to raise interest rates until the inflation is under control. A lot of people are thinking that we're going to do this pivot at the end of the year. I think that's gone. The talk is we're going to raise it at least a half point here. But the thing that's going to make it interesting, Michelle, is the reason why the Fed is raising interest rates right now. And that is because the American consumer, for the most part, continues to spend. It is the American consumer who drives the GDP for the most part, and they're just not backing off yet. And as they're continue to spend, Powell's going to continue to raise interest rates. Eventually, you're going to get to a breaking point where people quit spending. I'm not sure where that's at. So it's going to be interesting to see. But like you look at the livestock market, specifically cattle market are a nice uptrend. The supply is tightening. Do you get to the point where the consumers just say, I can't afford this higher priced beef? But, just this adding the Fed influence into the market is just going to add that much more volatility into the summertime.
No doubt. All right. Thanks for joining us, Jim McCormick with agmarket.net. That is Markets Now.